Hello there. This is James, and you're watching OneRoyal, and it's live. But it's not just OneRoyal, it's live. Oh no, today it's OneRoyal, and we're watching a watch along of the non farm payroll. So happy NFP Day, everyone. But before we get into all of that, talk about the event and then watch it together, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, happy NFP Day, everyone. And the NFP, as you probably know, tends to be potentially one of the big market movers. Not always. I mean, it's lost a little bit of momentum from the day when I first started, but it still can have a big impact on the market. And one of the questions being asked at the moment is, can NFP or can today's NFP save the US dollar? And as well as that, what will the NFP indicate to us about when the Fed may cut rates next? Now, for those who are new to trading and might not know what the NFP is, well, the NFP, or non-farm payroll, and why it is important is this: it measures the change in the number of people employed during the previous month, not including farm workers. Hence the name non-farm payroll. Now, this is indeed seen as a key indicator to how the US economy is performing, because obviously if we're seeing job growth, then obviously we're seeing more people make money or earn money and putting more money back into the system. So clearly it's a very vital indicator to how the US is doing. Now, the expectation on this particular reading is 159,000 new jobs. So we're looking at 159,000, between 159 to 160,000 new jobs created last month. The previous reading was a little bit disappointing. It came in 143,000. And in fact, if we look over the last couple of, NFP readings, October was 254,000. November was shocking. It was 12,000. December was 227,000, and January was 256,000. And February, again, disappointed with 143. So we are expecting, a bit of more of a boost in the numbers, like I say, between 159 to 160. That is what the market is obviously hoping for. Now, this announcement comes at a real crucial time for the market. Okay? Because don't forget, okay, we've had a lot of very negative US economic data. I mean, for example, the Atlanta Fed projects that the USD GDP growth will decline by negative 2.8% in quarter one. So negative 2.8% in quarter one. But this is not the only thing. The only thing which is, being negative for the market, because as well as that, consumer confidence is down, retail sales is down, construction spending is down, manufacturing spending is down. So there is a lot of very negative US data coming out from the market at the moment. A lot of negative data coming out from the US at the moment. So this is why it's actually really crucial. And the other thing, not that I'm one of those who think they're connected, but the ADP, which is a private survey of new jobs created, similar to the NFP, but the NFP is governmental. This is a private. Wednesday's ADP Employment Change was announced at 77,000 versus 144,000 expected. That's a shocking reduction. Now, excuse me, some people out there, or some traders, believe that the ADP gives like indication what the NFP is. In my experience over the years, I've never seen really any correlation between the two. But that's a very, very, very low figure, which is, particularly worrying at the same time. So it's not just about the NFP. NFP is the main thing, but of course, we do have US unemployment rate, which is also being announced today as well. Don't forget the last reading, it ticked up slightly. The expectation is for unemployment to come in and will remain at 4%. Okay. At the same time, we do have US average earnings. Year on year, expectation is 4.1%. Okay, so we got those events coming out at the same time as well. Now, the market is really looking for some sort of good reading. It needs some good news, because as we speak and we close the week out, the US stock market has had the worst trading week of the year. Okay, the worst trading week of the year. Okay, the Magnificent Seven. The Magnificent Seven, Nvidia, Amazon, Apple, Tesla, Meta, Google. There's one more in there I can't remember off the top of my head. Amazon, there we go. They've all started the year, apart from Meta, down from last year, and they were holding the market up, but they're down this year. As well as that, of course, you've got the concern of tariffs. Won't he do tariffs? So realistically, the market is looking for something generally really positive from this. Now, I don't think really the main benefiter of this, if we do get a good reading today, is going to be, of course, the US dollar, because that does need a boost. Because currently, that's trading at a 4-month low against the euro and the sterling. In fact, it's trading around a 5-month low against the Japanese yen. There's other reasons for that as well. It's not just weaker dollar with the yen. You've got obviously the Bank of Japan, who are raising rates, and plus you have the safe haven status of the Japanese yen driving that as well. The other thing why this is highly anticipated, of course, is that the NFP reading will give the market sight into when the Fed may cut rates. Don't forget, the end of last year, the market was excited. Let's sip my coffee, sorry. End of last year, the market was excited because they were expecting several rate cuts this year from the Fed. Disappointed them a bit, because at the end, the Fed said, no, we're going to hold steady. And now they're not expecting many rate cuts. But if we keep getting negative data out of the United States, eventually the Fed's going to have to do something. So this is, again, why they're going to be looking at this to see if the Fed may cut rates. Now, the market is sort of pricing in at the moment that the Fed may cut rates 3 times this year. Before then, they were thinking maybe once or twice, but now they've gone up a little bit because of the recent data as well. The other thing about this event as well, okay, and I don't think we're going to see the implications of this, but of course, we might see a little bit of the Doge firings at the federal, because don't forget, Musk and his team are letting go a lot of federal workers. So we need to see how this affects the labor market as well. I don't think today's reading we will see that. I think we'll see that maybe in next month's reading or a few readings ahead of that. Then we'll start to see it. So I don't think that, but the market is interested to see if we can start seeing this impact and the impact of this as well. And in general, especially after the ADP, which is private hirings, the market is interested to see how nervous the job market is in hiring during these uncertain times. They're nervous to see if there is people willing to employ people during times when there is so much uncertainty with will he, won't he do tariffs? At the same time, we are seeing a little bit of economic slowdown as well. Like I've already said, consumer confidence is down, construction spending is down, manufacturing spending is down, retail sales are down. So we're already seeing that. So how confident is the job market on hiring as well? So this is something else which is playing on the market's mind. Anyway, let's go through a couple of potential scenarios, because the NFP, you never know. It is a bit of a circus. It could be a bit of a circus. Let's go through some potential scenarios. Potential scenario number 1. NFP is announced higher than expected, and it gives a boost to the dollar. Potential scenario number 2. NFP is announced lower than expected, putting more pressure on the US dollar. Potential scenario number 3. NFP is announced lower than expected, puts more pressure on the US dollar in the short term, but gives the market a small boost, as then they expect the Fed rate cut in May to be priced in. Potential scenario number 4. NFP is announced as expected, adding further pressure on the US dollar because then it's not the growth they needed. Potential scenario number 5, unemployment rate rises, overshadowing the NFP announcement. And potential scenario number 6, market shows very little reaction, because that sometimes happens. We can build these events up and then nothing. But anyway, let's get ready, because we're a few minutes away from it. First of all, I want to look at the euro against this announcement. It's the euro dollar, because like I say, it's trading around a 4-month high against the greenback. Currently trading at 1.08572. Because I'm live streaming, I can only use a few internets. So I'm going to use my phone to find out what the announcement is. So we're going to have a look at the euro, and then we'll look at the cable, gold. Again, we've got 2 seconds anyway. We've got 2 seconds to go. 2 seconds to go. Let's have a look. Let the market digest. Okay, hang on. Little spike up on that. It's a 30-minute chart, don't forget. Let's see what it says. Hang on, we're moving. We're beginning to move. Let's digest. Okay. Comes in lower than expected. 151 new jobs. 151 new jobs. Don't forget, the expectation was 159, 160. It comes in at 151, slightly less than anticipated. Okay, slightly less than anticipated. Not massively low, but still lower. Unemployment. Now, here's the kicker. Unemployment comes in at 4.1%, so slightly higher than anticipated. Slightly higher. Let's have a quick look as well, see how the market is general. Okay, gold is spiked up a little bit on the back of this announcement as well. And let's have a look at the cable, how the cable's doing. Cable, again, spiked up a little bit, and now the market is digesting. But let's have a look at the Japanese yen as well, dollar yen. Okay, the dollar sort of bounced back up a little bit, but it still looks under pressure to me. Again, let's go back to the euro, see if the euro's decided. Okay, all right, okay. Anyway, unemployment coming at 4.1%. So higher than expected as well. Higher than expected. So it rises only a little bit, though. Only a little bit, only by 4.1%. Now, I'll be interested to see. How the market adjusts to this, because again, it's higher than last week's reading. Because don't forget, last month's reading came in 142. This could come in at 151, so slightly higher, but slightly below expectations. I mean, it's not shockingly low. It's not shockingly low, but it's still slightly lower. But like I say, the market seems, again, fairly muted. So maybe potential scenario number 6 at the moment was the most likely. But again, with the NFP, it does take a little bit of time sometimes to digest and take this information in. But anyway, we'll have we'll keep looking at it, keep close eye on it. Yeah. Anywho, don't forget, of course, guys, this is a live show. I'm live. So feel free to talk to me or ask me questions or share with me your opinions. Especially if you're watching me on YouTube, come along, say what you think, and share with me your opinion by all means. Let me know if you have any opinions. But anyway, like I said, again, one of the big questions was obviously with Doge or whatever you call it, their impact on the federal firings. I don't think we'll see that impact till next month or the next reading anyway. So so again, this is why I think it's fairly muted at the moment. Be interesting because obviously, of course, the US market opens up in about an hour's time. So then we can see how the reaction is with that. I mean, especially, like I said, we're going to bring up and share with you the S&P, because I'm watching this very, very, very closely. If you have a look of how many losing trading days they've had over the last week or so after reaching an all-time high, you can see it's been under an awful lot of pressure. So it'd be interesting to see how it reacts. Personally, I think the main beneficiary of this event would have been the US dollar. But even way, looking at S&P, it's touching that key 200-day moving average, which is also really, really interesting and certainly worth watching and keeping an eye on as well. So we'll have to keep an eye on that. Like I said, ladies and gents, don't forget, this is indeed a live show. So if you're watching me on YouTube, by all means, send me a comment or ask me a question or tell me your opinion on it. Let me know what your thoughts are. I'm just looking at the news or anything like that. Or do you like the show? Do you like this little these watch-alongs? Because I love doing these watch-alongs. I prefer, to be fair, when there's a little bit more action, obviously in the market, when it's a big movement. But like I say, it's touch and go sometimes with the NFP. The days where it was incredibly exciting and fast moving, it's not as keen. Plus, don't forget, at the same time, the market tends to focus on one story at a time. And of course, the main story at the moment is the T word, which is, of course, tariffs. So that's the main thing driving the market at the moment. Anywho, if there is no questions, or there is nobody who wants to chat with me, it's okay. Not a problem. Don't forget, OneRoyal Live, we broadcast once a day, every day. Okay? Well, at least once a day. Sometimes with breaking news and big events, we might go live more than that. And we are currently live on the blog, on YouTube, and obviously on Twitter as well. We'll be live soon on our Facebook pages, Instagram, and things of this nature. So we will be doing these on a regular basis. The idea is that we can talk about the market. You guys can chat to me as well, share me your ideas. We can build like a bit of a community in it, that sort of thing. So that would be really okay. Actually, quickly before I add on that, we've got a little bit of bit more movement now because obviously the market's digested it a little bit. See, the euro now is slowly beginning to creep up. Where are we now? Okay. Now we're approaching the high last seen the day after Trump's election. That's interesting. Gold as well. Okay, nowhere close to the all-time highs we've witnessed already, but that's up now. It was trading at 213, so now up 2,923, so that's on the move. British pound, okay, that's at the level, coming close to the level now, not seen again till the day after Trump's election win. So obviously, you know, we are now witnessing a little bit, you know, instead of what they called it, the Trump pump, where he boosted the market and boosted the dollar, now seeing a bit of the Trump dump taking effect. Anyway, you sure there's no question, guys? Nobody wants to ask me or anything or say hi or say hello, especially if you're watching me on YouTube. Say hi. Okay. Okay. If there is no questions or no opinions, that's fine. It's not a problem. Like I said, don't forget we go live with OneRoyal Live at least once a day, maybe more than once a day. And it is a new show. So we're trying to build a community. We will do more like watch-alongs as well in the future, things like that. And obviously education, we do, you know, lots of stuff in relation to that. If you are watching me on YouTube and you like this sort of thing, by all means, give us a like. If you like this type of content, maybe subscribe if you want to. And hit the notification button so you know next time we're going live. If you're watching me on Twitter and you quite like this sort of thing, it's a heart in it. Give us a little heart. Quite nice to know. And if you're watching this recording, not live, but watching it as a recording afterwards, because it stays there, and you have a question or have a comment, by all means, put it in the comments below, and I will reply to you when I go live, which again will be Monday. Talking of Monday, let's leave the NFP away. Next week, we got a big week ahead of us, so we always have. We have US CPI, Bank of Canada interest rate decision, US PPI, and UK GDP. And with no doubt, we will also have more drama about will he, won't he do anything about the tariffs. So please feel free to join me. Anywho, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.